Profit. I'm Mahima Vachrajani and with me is Alex Matthew and you are watching Ask Profit, a show that gets all your stock related queries answered. Before we move on to the queries, let's take a quick look as to how the markets are doing at present. Let's pull up the Nifty 50 as well as the Sensex, and it's trading higher. It's trading around 0.6 odd % higher than Nifty 50. The Sensex as well as the Nifty Bank is trading a tad bit higher. The overall Sensex is seeing gains of about 0.5 odd %. There is a Nifty Bank which is seeing gains of about 0.3 odd %. The broader end of spectrum though, the mid cap 150 as well as the small cap 250. Let's pull up that. The mid cap 150 is trading 0.5% higher, but small cap 250 is seeing gains of about 1.3 odd % in trade today. So it's a clear outlier for sure today. Let's pull up the Nifty 50 constituents and see how they are doing in trade today. There are counters like Bharat Electronics, Kotak Mahindra, Eicher as well as Axis that are under pressure. But there are counters like Nestle, Titan, Tata Consumer, Eternal, all consumption names doing well. Nestle up 2%, Titan up 2% as well. Tata Consumer up 1.7%, Eternal up 1.4%, followed by HCL Tech, Bharti Airtel as well as Reliance, all seeing gains of about 1 odd %. Let's pull up the advanced decline ratio and see how the advanced decline ratio is faring. In terms of the overall advanced decline ratio, there you go. The overall chart has been widening throughout the day, slightly narrowing at the moment. There are around 1900 odd advances versus that of 330 odd declines. So that ratio is almost 6:1 as we speak right now. Let's also pull up the sectoral heat map and see how sectors are faring in trade today. There you go. It's Nifty Media, which is up almost 1.7%, followed by Nifty IT, which is doing well in trade today, up by about 1 odd %. Nifty Consumption FMCG stealing the show for sure, up about 1.8, up about 0.8 to 0.9 odd %. Nifty Auto also doing well, up by about 0.7 odd %. But something that's not doing well again today is the Nifty Defense. There's profit booking seen in the entire defense pack. Let's pull up the constituents on the Nifty Defense and see. It's down by about 1.2 odd %. But counters like Data Patterns seeing cuts of about 4 odd %, Paris Defense down 3%, Zentech, Garden Reach as well as Cochin Shipyard all down by about 1.5 to 1.8 odd %. The only counters in green are BML, which is hardly up 0.2%, and Mishra Dhatu, which is up hardly 0.2% as well. Let's also see the BSE 500 overall, the total market, and see what counters are buzzing in trade there. There you go. Of course, your Dixon Tech is one of the top losers for Data Pattern, Solar Industries, Lloyds Metal as well as Siemens. There's Balaji Mines that's up by about 13.5%, Network 18 up 10%, Infibeam, Alkyl Mines as well as Endurance Tech that are doing well in trade today. India Mart also on the back of that Nuvama note doing very well in trade today, where the target price was hiked to 3,100 for the counter. All right, with that, let's welcome in our guest for the day, Vaishali Parekh, Vice President and Technical Research at Prabhudas Leeladhar, and Rajesh Agrawal, Head of Research at AUM Capital, joining us now. Welcome to both of you. Before I move on to the questions, Vaishali, I'll come to you as to what is your reading with respect to where the overall Nifty as well as Bank Nifty is concerned, and if you were to pick certain counters today to go ahead and buy for a short-term perspective, what would they be?
Very good morning, Mahima, Rajesh, and all viewers. Yes, the market is gradually showing strength after yesterday's move. Let's talk about the levels first. So 25,200 is a very comfortable zone. So once we see a close about 25,250 levels, I think it induces further upside target projections of 25,500, 25,600. Likewise, even Bank Nifty, we are very fine at these levels. So now for near-term basis, 56,000 would act as a support. And I would look at the target of 57,500. Now, sector-specific, well, I would say, or rather stock-specific also, I think it's now time to focus on mid-cap, chemical sector, because we are seeing good pickup, good momentum trying to set in chemical. Like in the front line, we are already seeing SRF getting in momentum. So is the case with Aarti Industries. So I think this is one sector which is been underperforming since quite a while. And I'm looking at attractive levels here on.
Your eye on mid-cap, mid-caps, especially in the chemical space, is the view that's coming in from Vaishali. All right, our first question for the day then is from Jaikishan Guneshwar, who is writing in, and he's got an IPO allotment of Tata Technologies last year and wants to know if he can continue to hold at the moment or not. Rajesh, I'll come to you on this one, and if you can also try to pull up how Tata Tech has done since its IPO. Rajesh, what would your advice be to Jaikishan? Should he continue to hold or sell at the moment?
Good morning, Mahima. Good morning, Vaishali. Tata Tech, since its IPO, has not done anything on the bourse. I remember it was around 1400 after its listing, and it has fallen down to almost 700. That's almost a 50% discount from post-listing to current price. Despite the fact that the company has a strong footing in auto software, I would say, and they're doing very well. Previously, they were dependent for maximum revenue from Tata Group. Now they have diversified, not only diversified the client base, but they have diversified the product base too. Going forward, I think this company can give almost 15 to 20% return from the current market price in the next 1 year or so. So at this point of time, we suggest a hold on this stock.
Right, so that's with regards to where Tata Technology stands. Our next question then is from Dilip Asolkar, who's writing in from Mumbai. He's got 22 shares of Kaynes Technology, bought at 5850 a piece, and he wants a midterm view, that is from 3 to 6 months perspective. Vaishali, I'll come to you on this. What are the charts indicating when it comes to Kaynes Technology?
So, well, the stock has, after making a high of around 8,000 levels, it's now consolidating. It did make a low of 4,000, and currently it is nicely sitting on a cluster of moving averages. So for now, I would say keep 5,500 as a near-term support level. And once we see the stock moving above 6,000 with a 6 months perspective, you can look for the first target of 6,500. And from there on, we can have a relook. So for now, it's a positive view, and 5,500 should act as a support.
All right, so that's with regards to where Kaynes Technology stands. Our first caller for the day, Pradeep, is calling in from Bengaluru. Pradeep, a very good morning to you. How can we help you today?
Very good morning to all of you, madam.
Good morning, Pradeep.
Yes. You see, I am having 30 shares of CreditAccess Grameen.
Okay.
Right. Now, it has been languishing for long,
right,
but recently it has made an up move. And it has just broken even just now. So I would just like to know whether I should hold on to it or should I exit from it.
Okay, and when you bought CreditAccess Grameen, was it the fundamentals that you saw?
Yes, it was the fundamentals because I am a long-term investor.
Understood.
And I'm having a vision. I've been investing for 3 years and I have a vision of further 2 years.
Understood. All right. So I got your question, Pradeep. I'll take this up with Rajesh. Rajesh, CreditAccess Grameen is the counter, and he wants a view whether he can continue to hold from a longer term perspective or not. He's just moved to the green, making profits of about 200 odd rupees. What is your view?
See, the gentleman said it right. It has not done anything in the from a very long period of time. And this moment, I think it's just because of market condition and nothing else, because the numbers are not that supportive at this point of time. Even there are concerns about their margins and asset quality going forward. It's better to switch to a better bank, I would say. HDFC Bank or Axis Bank would be a better choice at this point of time.
Okay, so that's with regards to where CreditAccess Grameen stands. In fact, Q4 was a quarter where it turned profitable after losses for quite few quarters. So that is also something that has, kind of aided the positivity in terms of where the stock momentum is concerned. All right, the next question is from Aniket, who's writing in and wants to invest in both Senco Gold as well as Sky Gold, and need to know as to where rally in the gold stocks will be in the next 5 odd years. Rajesh, I'll come to you on this one. In fact, we'll be speaking about Sky Gold on KYC today. That is Know Your Company, which is the next show. The question that we are going to pose to Sky Gold on KYC today will be that is promoters selling a major concern, plus the strong growth that the company has seen. Will it be able to sustain that? And what has led to the negative cash flow in the past 2 years? That is the key questions that we'll be speaking on the Know Your Company show. And we'll also also be speaking to the management, that is Mangesh Chawan. In fact, he's the management as well as the promoter of the company, MD and the CFO and plus the promoter of the company, and we'll be speaking to him about all of these concerns and of course how Sky Gold is seeing itself in the next 5 years. But Rajesh, speaking about Sky Gold and Senco Gold, what's the view like, and of course your outlook on these gold stocks on the back of rising gold prices?
Mahima, coming one by one, gold prices has gone beyond 1 lakh, as we all know, and that's majorly because of one, buying by central bankers across the world, and that was one of the major reasons. And second, because of geopolitical tensions going across the world, and people are moving to safe haven assets, and that's the reason gold has gone up like anything. It's scoring above 3,300 odd dollars. At this point of time, too, I won't be surprised if moves up further from here because of the marriage season that's coming in the next few months, and because of the tensions that's still going on. And not to forget about the dollar becoming weaker. So these are some of the factors which have pushed gold prices. Whether they will sustain or not in the near term is a question that we all are looking for. But for a longer term horizon, yes, it's a good bet as a commodity. As far as stocks are concerned, I think Sky Gold, you raised a very valid question that the company has been facing negative cash flows from since very long period of time, and for that reason, we are not that bullish on the stock. As far as Senco is concerned, the company has been doing well. It was basically concentrated towards the eastern part of India. Now they are trying to expand to other part of the country. It has corrected quite a lot from its recent highs, I would say, and the company has been doing well, expanding their product profile also. So somebody can take a position in Senco Gold for maybe a target of 400 odd rupees. But a safer bet to play the entire gold space, I still believe that would be Titan, because it belongs to a larger group and has a large number of stores going well. I would be more happy going with Titan than going for Sky Gold or Senco at this point of time.
First, Titan over Sky Gold or Senco Gold is the view coming in from Rajesh there. All right, our next caller, Pranamjeet, is calling in from Himachal Pradesh. Pranamjeet, a very good morning to you. How can we help you today?
Good morning, madam. Madam, I am having 10,000 shares of Hindustan Zinc.
Okay.
At the rate of 433.
All right.
Want to know long term as well as short term.
Okay, Paramjit, not sure and I don't remember it correctly. Have you asked this question before to us?
No.
No, okay, all right. So then congratulations, because you're sitting on a significant amount of profits of 1 lakh odd rupees. So first of all, congratulations on that. And I'll take this up with Rajesh again. Rajesh, he's sitting on profits of 1 lakh rupees already right now. Would you recommend to book partial profits and hold some of the share of Hindustan Zinc, or should he continue to hold all 10,000 odd shares?
See, the quantity is very huge, and I'm not aware of what percentage of portfolio the gentleman has in Hindustan Zinc. If it is the only stock which he has, then it's quite a risky bet, I would say, because concentration is there. So he might think of liquidating some portion of it if it's a huge percentage of its portfolio. Otherwise, as far as the company's fundamentals are concerned, we are very bullish on this going forward, not because of the zinc as a commodity doing well, but because of the silver component this company has. They give a good dividend. And at these prices, I think the valuations are also very attractive. So for a longer term horizon, one can continue to hold, but just be aware of your quantity because it's a very huge quantity.
Okay. I'm not sure if Paramjit is still there online. If we have him, do we have him? Okay, we don't have him. The call is dropped, it seems. But okay, next time when he calls, we'll ask him about his concentration in Hindustan Zinc. The next question is from Sandeep Kore, who's writing in and asking about Asian Paints and wants to know if there's a chance for Asian Paints to touch, back its all-time high. Vaishali, I'll come to you on this one. What are the charts indicating for Asian Paints now?
Well, it's hard to tell whether it will reach its all-time high, but right now I can say that, it is technically quite well placed. I mean, there is good correction taken place. So I would first look at a target of 2,500 to 2,700 levels. Then let's see how it goes, because overall, well, crude is quite in favor of Asian Paints right now. And I would say take it as a trading strategy, not too sure whether it will go to those high levels.
Okay, so that's with regards to where charts are concerned for Asian Paints. Our next caller, Ajay, is calling in from Ambala. Ajay, a very good morning to you. कैसे मदद करें आपकी?
Good morning, ma'am. Good morning, sir. Sir, मेरा क्वेश्चन मैम AI इंजीनियरिंग पे है. मेरे पास 34, 39 पे 300 शेयर्स है. मैम ये काफी नीचे आ गया है. क्या मैम इसको बेच के सीमेंस एनर्जी ले सकते हैं? वो 27 से 25 के आसपास है.
और ये आपने चार्ट्स देख के खरीदा था या फंडामेंटल्स देखे थे कंपनी के?
नहीं मैम, फंडामेंटल देख के ही लिया था. मैं वहाँ से 1-1.5 महीने पहले लिया था, बट मैम चलता ही नहीं है, ये नीचे ही आता जा रहा है. मतलब
ठीक है, ओके, समझ गए आपकी क्वेश्चन. राजेश, आई विल टेक दिस अप विथ यू एंड इफ पॉसिबल यू कैन आंसर द क्वेश्चन इन हिंदी. AI engineering is the counter. He's bought it a month and a half ago and he's sitting on losses of around 45,000 rupees. क्या करना चाहिए उसको? खरीद के रखना चाहिए, होल्ड करना चाहिए या सेल कर देना चाहिए, एंटर इनटू समथिंग लाइक Siemens?
See, taking one by one, as suggested, let me reply in Hindi. AI इंजीनियरिंग आपने लिया है फंडामेंटल्स देख करके, और मैं कहूँगा कंपनी अच्छी है, बने रहे स्टॉक में. 1 महीने में अगर आपने फंडामेंटली इन्वेस्ट किया है तो थोड़ा सा मध्यम से लंबी अवधि का नजरिया रखें, और 1-2 महीने के लिए चिंतित ना हो स्टॉक में, क्योंकि मार्केट में कई कंडीशंस प्ले करते हैं, तो इस वक्त होल्ड रहेगा. जहां तक सीमेंस एनर्जी की सवाल है, अभी रिसेंटली डीमर्ज हुई है सीमेंस कंपनी. पावर का पोर्टफोलियो इनका बहुत अच्छा है. 15,000 करोड़ के आसपास की ऑर्डर बुक है, जो कि करीब 2 साल की रेवेन्यू दिखाती है, और नए ऑर्डर्स आने की भी पूरी संभावना है, क्योंकि सरकार का पूरा नजरिया पावर वगैरह को बढ़ावा देने का है. तो लॉन्ग टर्म इसका बहुत अच्छा है. अब चूंकि ये अभी हालिया की लिस्टेड कंपनी है और डीमर्ज में कई लोगों को मिले ही है, तो हो सकता है कि सप्लाई कंसर्न्स हो. कुछ MSCI वगैरह में भी सेलिंग आने की बातें चल रही है, क्योंकि सीमेंस जिनकी थी उनके सीमेंस एनर्जी आए, तो थोड़ा शॉर्ट टर्म में प्रेशर हो सकता है, बट लॉन्ग टर्म के लिए बहुत अच्छा स्टॉक है. इसमें कोई भी गिरावट में आप खरीदारी कर सकते हैं.
So that's with regards to where AI engineering as well as Siemens Energy stands. Our next question is from Mohit, who's writing in from Ludhiana. He's holding 500 odd shares of restaurants brand Asia at 106 a piece, and his time horizon is for the next 3 odd years. Rajesh, I'll again come to you on this one. QSRs in the past 2 quarters have fairly done well, but do you think that restaurant brands is the right pick amongst the QSR present right now in India?
I don't think so. The numbers are not that exciting. It's not doing that well. The expansion has not been that great. And yes, I agree that inflation is at subdued level at this point of time because of various reasons, but you never know when commodity prices start moving up. So margins would always be a concern. Even SSG has not been that great. A better play would be either Jubilant Foods or Sapphire Foods for that matter, rather than going for restaurant brands.
Okay, so that's the view with regards to where these QSRs stand. Our next question is from Shankar, who's calling us from Chennai. Shankar, a very good morning to you. I believe you have a question on Canara Bank.
Yes, very good morning. Yesterday I bought Canara Bank at the rate of 109 rupees 50 paise.
Okay.
1,300 shares. But my problem is I'm only 1 month. I have a short-term outlook. Any chance it will surpass us 121 or 130 rupees?
Okay, got your question, Shankar.
Please guide me.
Got your question. I'll take this up with Vaishali. Vaishali, what he's saying is his time horizon is just 1 month. Do you think it'll cross that 121 to 130 mark in that 1 month period?
Well, it's wishful thinking, but right now, as I said, we are at a resistance. We need to move past the levels to see further upside. Now, talking about PSU banks and especially Canara Bank, I think it's getting in a trend. So if 1 month is a horizon, keep 105 as the stop loss. And if all going well, there is good buying happening in PSU banks. In all likelihood, this can do 150.
Okay, so that's with regards to Tata Conserva Canara Bank. Our next question is from Arjun, who's writing in from Bengaluru. He's got IREDA 100 shares bought at 165 a piece and planning to hold for the next 5 odd years, and wants to know if this is a good stock to hold in your portfolio. Rajesh, what's the view like?
See, the company is good. They are into financing of renewable energy system, and with the recent RBI guidelines coming for project financing, that's a positive for all these stocks, whether it's PFC, REC, or IREDA. For long term, yes, it's a good company, but at this point of time, the valuations seems to be on a higher side. So I would say wait for some correction, maybe 150, 140 odd rupees would be a better levels to enter.
Okay, so that's with regards to where IREDA stands. Our next caller, Mansing, is calling in from Andhra Pradesh. Mansing, a very good morning to you. How can we help you today?
Good morning, ma'am. I want to add PG Electro Plus.
Okay.
How is the fundamental and what are the entry levels? Is it the right time to buy for 2 to 3 years?
Okay, got your question.
Any other pick from packaging
EMS
industry?
space? Okay, got your question, Mansing. I'll take this up with Rajesh again. He wants to buy PG Electro Plus. Do you think that's the right pick in the EMS space, Rajesh?
See, EMS as a space is doing very well and is likely to do well in the near future because of various reasons of the government focus and all those things. PG Electroplast is one of the companies that is going to do well at this point of time, although the valuation seems to be a bit on a higher side. But still, for a long-term view, I think one can buy this. Even Sharma SGS, so one can consider. Both these companies are going to do well.
All right, so that's with regards to where these EMS stands. And of course, we have one more question on Dixon Technologies today. Satish from Bengaluru is asking this question. He's holding 110 odd shares of the particular counter and sorry, not 110, 16 odd shares of Dixon Tech bought at 15,050 a piece, sitting on a loss of 14,000 odd rupees right now. Vaishali, today there was a note on this particular counter with a 37% downside. What's the view like? Should he continue to hold Dixon or book losses right now?
Well, I would say the trend is down right now. There is no confirmation of an upward trend. So keep today's low as a stop loss. And if any bounce coming in, you can exit them.
Right. So that's with regards to where Dixon Tech stands. Our next question then is from Mohan Raj, who's writing in from Chennai. And he wants to know if he can buy Zee Limited at the moment from a swing trade perspective. Vaishali, is that the right thing to do right now?
So I would say Zee actually has already gone into a momentum since quite some time. So I would say keep 140 as the support or a stop loss. And I think look for a target of 155 to 160 for now.
Okay, so that's with regards to where Zee Entertainment stands. Our next question, in fact, our next caller, Shankar, is calling in from Kolkata. Shankar, a very good morning to you today. How can we help you?
Very good morning, ma'am. See, I'm having 20 shares of Tata Communications.
Okay.
Purchased at 934 rupees about 3 years back.
Okay.
So I would just like to know whether I should keep it for another period of 2 years or should I book profits?
Okay, got your question, Shankar. Rajesh, what's the view like?
See, if you're holding, considering holding for a period of 2 years, you can continue to hold. The fundamentals are very strong. Company doing very well. Submarine cable business is doing well. At this point of time, although the valuations are on our high side at 1,600, 1,700 odd rupees, but for a longer term horizon, it's a hold.
Longer term horizon, it's a hold on Tata Communication. The next question is from Prakash, who's writing in from Chennai. He's holding 1,000 shares of Aditya Birla Capital, bought at 220 a piece, and he's holding this since 2017. What he's saying is, can he hold this counter for the next 3 odd months for a 50% plus return? Vaishali, it seems far-fetched, but do you think that's possible?
So see, Aditya Birla Capital has given a multi-year breakout level, I think, and it is all-time high actually. So I would say, well, 250, 255 should act as a stop loss. And since the trend is already in a strong upward move, I think this can go towards 280 levels to 300 to start with. So yes, 255 should act as a stop loss and continue holding.
Okay, so that's the view with regards to where AB Capital stands. Our next question is from Kishore, who's writing in from Hyderabad, and his question is on Tejas Networks. He's holding 100 odd shares bought at 1025 a piece. From the last 1 year, what he's saying is that he's sitting on a loss. Let's try to pull up what his losses are exactly. It's roughly 26,000 odd rupees, and he wants a long-term view on this one from an 18-month perspective. Rajesh, I'll come to you. Should he hold average at the moment or sell Tejas Networks?
See, valuations are still high, although the company is doing well, the numbers are good, order book is good, and the sector looks very exciting. But still, we find that the valuation at these levels are quite high. It might slip to maybe 600 odd levels in the next 3 to 6 months, what we perceive as. So it's better to either hold for a long period of time, otherwise for a medium term, I think one should try to work book losses.
Okay, so that's with regards to where Tejas Network stands. Our next question is from, do we have the name of this person? Jitendra. Okay, Jitendra Mahajan is writing in, and he's holding Cochin Shipyard's 100 shares bought at 2,700 a piece. And he wants to know if he can hold or sell at the moment. So he's bought at elevated levels. Vaishali, would you recommend him to keep holding it from a medium term perspective, or can he sell the counter and book losses?
I think it's already given a good run up. So right now it is in a regular retracement zone. So if 2000 levels break, then it would call for further downslide. So keep a stop loss of 2000, because according to me, the defense sector has done its bit and it can consolidate to probably see some profit booking. So keep a stop loss of 2000.
All right, so that's with regards to where Cochin Shipyard stands. But with that, viewers, it's time to slip into a very short break. But we'll be right back answering all your queries on the other side. So do stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Is an ED seeking explanation on Yuvraj Singh, Harbhajan Singh, on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Welcome back. You're watching Ask Profit, a show that gets all your stock related queries answered. But before we move on to your queries, there's an interesting story development that Shimi is bringing in. The government is considering waiving spectrum usage charges for defense, armed forces as well as paramilitary and science and technology department as outstanding dues run into several crores. Shimi is joining us with more details on that. Shimi, what are you picking up?
Yeah, so this has been a demand from, certain departments, several key departments rather, including defense, armed forces, paramilitary forces, as well as the science and technology. So what sources are telling us that this entire proposal would be taken up by cabinet meeting today, with starting, a few minutes later. So the move comes amid concern raised by these departments over the imposition of spectrum usage charges on that is used for non-commercial or strategic or scientific purposes. So what officials are telling us that this cumulative dues from these departments have run into several crores over the years, as most of them have not paid any SUCs payment for an extended period. So what also we are getting sense that these are critical institutions and that use spectrum for national securities, research and emergency responses. So they are not generating any revenue from this usage. So the standard commercial charges shouldn't apply is what the demand has been. And department have objected also to being billed under the same framework as telecom operator, emphasizing the fact that they are not for the commercial usage. The nature is non-commercial. So the argument came that who will pay the SUC on that part. So now the proposal on the cabinet table to decide that whether they will get the waiver or not. But this has been a long-standing demand, and we will see some decision coming in the today's cabinet meeting.
And we'll keep you updated with regards to what the cabinet meeting decides with regards to where these spectrum usage charges stand. All right, thank you so much, Shimi, for breaking that down for us. Let's continue with the queries then. Rahul from Jaipur is writing in, and he's got 2,419 odd shares of Newgen Software, bought at 1195 a piece. He wants to know if he can add more, and if yes, for how much time can he continue to hold? Vaishali, I'll come to you on this one. This is a very short-term query. Now he's clarified and written that he wants to hold this for the next 4 odd days. What would you recommend? Can he continue to hold the counter, or should he book whatever price he's getting right now?
I think if 4 days is the criteria, then 1100 is the stop loss, 1200 is the hurdle. So about 1200, it may maximum go to 1220, 1240. So act accordingly.
Okay, so that's with regards to where Newgen Software stands. Our next question is from Ravi Kumar, who's writing in from Tamil Nadu. He's holding 200 odd shares of Kalyan Jewellers, bought at 5 and 6 a piece. Wants to know if he can hold from a short-term perspective or not. Once again, Vaishali, your view on Kalyan Jewellers with respect to where charts are concerned?
So, well, Kalyan Jewellers, currently the price is 533. In fact, it's just taking a new round of momentum right now. So I would say keep 520 as stop loss and look for a trading target of 550. Above that, I don't know how short term period it is. So 550 would be the first target. Above that, 600 is the level to watch. That is the main resistance level.
Okay, so that's with regards to where Kalyan Jewellers stand. The next question is from Sunita, who's writing in from Hyderabad. She's holding Aegis Vopak at 233 a piece, 125 odd shares, and wants to know when the results came. I mean, what she's saying is she's been holding this since the results came, and she wants to know if she can continue to hold further or not. Rajesh, your view on Aegis Vopak?
See, I think it's better to book profit at these levels because I think all the fundamentals have been discounted in this. Any meaningful upside from these levels would take some time to materialize. So it's better to book profits and re-enter at lower levels.
So that's with regards to where Aegis Vopak stands. The next question is from Sunena, who's writing in from Bengaluru. She's holding Voltas 100 quantity bought at 1312 a piece, and she's saying she can wait for the next 1 or 2 odd months. And what could be the target price for that? Vaishali, on the charts for Voltas?
So I would say technically Voltas has been consolidating since a very long time after a recent high of 1900 odd levels and currently at 1300 levels. So I would say 1250 is the support, near-term support. As soon as the stock moves about 1250, it comes out of a big resistance level, and from there on, I would say there could be further rally going towards 1400 levels. So I think you should hold, not in a hurry.
Okay, so that's the view with regards to where Voltas stands. A very interesting question is asked by Dr. Nitish. He's asking if, as a student, what shares can he invest in right now? He's not given us the quantity, the kind of amount that he wants to invest in right now. But Rajesh, as a beginner, what would you recommend him to go ahead and buy right now, let's say 2 or 3 odd stocks?
See, as a beginner, I believe that he is new to stock market and just starting. So it's better to stick to large cap names or Nifty 50 names, which can be good for long term and be stable with less amount of risk. Equity as a product is always have an inherent risk attached to that. So as far as safe bet for a long term horizon at this point of time, I can suggest go for Reliance, HDFC Bank, ITC, Larsen, or a Cipla. These are 5 stocks from 5 different sectors, which can be held for a long term. If not in a lump sum, one can do a SIP mode, buying small quantities every month and accumulating these stocks for longer term horizon.
Okay, so that's the view with regards to where what stocks you can go ahead and buy right now as a beginner in the stock market. All right, and next caller, Vishal, is calling in from Chandigarh. Vishal, a very good morning to you. How can we help you today?
Yes, a very good morning to you, ma'am. I had a query, ma'am. I hold Blue Jet Healthcare, 579 shares at the cost of 891.
Okay.
Now, this stock is into the CDMO thing, but it is at a very high P, that is of 50. I was thinking of changing, although I'm not losing much on this. I was thinking of changing to Dodla Dairies, which is at a P of 30 and has shown good results. Is that a nice switch, or should I stay at Blue Jet only?
Okay, got your question, Vishal. I'll take this up with Rajesh. Rajesh, he's completely shifting the sector as well. But what he's saying is that it's based on the P multiples that he's looking at right now. But I think the right thing, and you would be the right person to answer this, the right thing to do would be to shift in the same space which has a lower P, right? What would you suggest?
See, I was coming to that only because when you are comparing P, you cannot compare apples with oranges. See, you're comparing P of a pharma company, growing pharma company, I would say, with a company in a dairy products, which are 2 different sectors having 2 different Ps. Even in the same sector, if you look at private sector bank and public sector bank, private sector banks are always trade at a higher P versus private sector bank. Public sector bank. So it's impossible to compare Ps of 2 different sectors. Coming one by one, Blue Jet is a very strong company. Rather, I would recommend a buy on this. The company has been doing very well. They export their products. They are into sweetener that's used in the toothpaste and other things. The expansion has been complete. And I believe that going forward, the numbers are going to be good because of the expansion and all. Dodla Dairy is also good, but there are inherent risks associated with that. So, and that's the reason for the low P, I would say. So rather than switching from Blue Jet to Dodla, what I would suggest, be in Blue Jet. And if you have spare money, you can invest in Dodla.
All right. Rajesh, hi, good morning. And Vaishali, hi, good morning to you as well. Joining a little late today, but then pleasure as always to be on this program with you as well. Mahima, and to speak to all of you. The first question that we're taking is, or the first question I'm taking, I should say, because you've gone and taken quite a few so far. Mayura Kshatriya is writing in, and she's asking about State Bank of India. She's purchased 650 shares today. And taking into consideration the relatively modest decline of about 1.7% over the course of the last 6 months. So she's looked at the price action over the course of the last 6 months. She's looking at whether or not to keep holding this. So Vaishali, on the chart, State Bank of India has not been a big mover, she's pointed out. What is the potential upside?
So I would say, good morning, Alex. Yes. These stocks, I don't think they should be taken as a day or two trading strategy. I think this is one of the heavyweight in the public sector banks. So technically, I think it's very well placed. Keep on accumulating. 760, 770 acts as a very good support. And long-term price projections, what we are looking at is perhaps 880 to 920. So according to me, this is not a trading stock. Just hold.
I believe we've got a caller from Hyderabad. Suresh is calling us. Suresh, very good morning. How can we help you today?
Yeah, hi. Very good morning. So is it right time to take an entry in NMDC? It has been fallen from 75, 76 zone to recent low. It's 67 for short term.
Okay.
Can I get the same level? I'm planning to take invest around 3 lakhs on the same.
Got it. Okay. So Vaishali, pretty straightforward question. When you say short term though, Suresh, you just want to clarify, you're talking about 1 month, 2 months, 3 months, 6 months?
I can hold it for 6 months.
6 months. Okay. Vaishali, so there you have it. The timeline is also defined. What is the level that you would look at as the best level to accumulate?
Well, so right now it is just moving in a narrow range of 65 to 70 levels. So 65 would act as a very good support. So buy closer to the support level. And once it crosses 70 levels, this is ready. It is coming out of its consolidation and it can go towards first target would be 76 and after that 86. So that's the target that we are looking at. So do buy and accumulate even at lower levels.
Next question is from Teja Reddy, who's writing in from Ireland, and he's saying that he's a daily viewer of our program. So thank you so much for that, Teja. His question is that he wants to invest in pharma companies from a view of 5 to 10 year perspective. What he has picked right now is Dr. Reddy's and Sun Pharma, and of these companies, he's saying that which stock would you recommend, and he has an amount of roughly 2 lakh rupees that he wants to invest in. Rajesh, your view, should he diversify into both of these counters, or should he invest 2 lakh rupees in one of these?
See, I would say diversify in both these counters. Put 1 lakh each into both the companies. Both the companies are very strong companies, frontline companies, having good product profile, and not only domestic, but they cater to international markets also. And some of them are feeling in the heat because of Trumps and all, but still going forward, I think both the companies are going to do well when you look at a period of 5 years. So diversify in both, put half money in DRL and half in Sun Pharma.
Okay. All right. We've got a next caller from Bengaluru. Murli is calling us. Murli, very good morning to you, sir. How can we help you?
Very good morning to you. And the question is to Mr. Agarwal is my favorite, Rajesh is my favorite fundamental analyst.
Okay.
My question is, I bought my wishes to him through you, and I bought 20 shares of 3M India at a rate of 29,075.
Okay.
There is a low liquid counter in MNC and low liquid counter. It is a good dividend yield. They started paying the dividend for the past few years now. All along they are not paying dividend also. This year the dividend is around 512 rupees on a 10 rupee share. But I am looking at a long term, and it has reached a peak of 40,000 rupees. Though it's an IPE company, now it is around 29,000. I bought around 29,075, 20 shares. What is the view? Because most of the MNCs are not, low liquid are not the coverage area of the analyst. So please guide me.
Yeah, it's an interesting company. The number of copyrights, the number of intellectual property that it has, the number of products that it has developed, it's an interesting story to say the very least. So let me ask Rajesh what he thinks about 3M India. It's not, as he's pointed out, the most liquid counter, and you heard the first part also. So I don't need to pass on those well wishes.
Thank you, Mr. Mulli, for your kind words. It's viewers like you which motivate us to come every day on channels.
I thought it was me.
Yes, of course, it's you. Because let me share with you a fact, Alex. My first venture in media around 20 years back was NDTV Profit, which I continued for almost 3 months after venturing to other channels. So NDTV will always be a favorite because it was one of my first.
Glad to hear.
Anyway, coming to 3M India, it's a very good company, no doubt. And as you said, a lot of IP rights, a lot of products developed in a long term. The only issue is the volume, which is not there. And that's a fact for almost all the MNC companies, because majority of the shareholding is either with the promoters or with the institutions which never sell. And for long-term horizon, you continue to hold, don't look at everyday price movement. It's a kind of stock which one can continue to keep in its portfolio for money, unless you have a requirement of fund, no need to sell kind of. So continue to hold.
Okay, continue to hold 3M India is the view coming in from Rajesh. Our next question is on HDFC Bank. Do we have the name of the... Okay, Amit Kumar from Gurgaon is writing in to know as to what he can do with his HDFC Bank holdings. Vaishali, on the charts, from a medium-term perspective, how are the charts faring?
Well, banking stocks are all doing well, and HDFC also is doing very well. So I think continue holding. It is in an upward trend, and this stock can go towards 2,000 and higher. So my view is positive.
I mean, are we reading that right?
Yeah,
So,
I just read that on the screen.
So I just want to ensure, if you're listening to this, Amit Kumar from Gurgaon, please clarify, because you've written 10,000 units of HDFC bought at 1929, which would mean that the acquisition price would be 1.9 crore. And another 10 units bought at 1,908. Of course, no judgment. If you bought, kudos to you, and hopefully you don't have concentration risk. Let's talk about JP Power next. And from HDFC Bank, it's a pretty wild switch. We've got viewer Srishal, who's writing in from Bengaluru and who is sitting on decent profit. He says that he has bought at levels of 14.2. Vaishali, on the charts, what would you do?
I think this too is in a good upward trend. Since it's for a trading perspective, keep a stop loss of 17. And I think this stock in times to come can go towards 2021. So still there is scope of further upside.
And we've gotten clarification on the HDFC Bank doubt that we had. Amit does indeed have 10,010 units of HDFC Bank.
Interesting.
Okay, let's take the next one. We've got ONGC that we're talking about. Prasanna is asking about this, and he's looking for a short-term trade. I believe that he's bought 5,000. Let's pull up the shares. Yeah, so he's bought 5,000 at elevated levels, 339 in August. And he's saying that it's not crossing 260. Yeah, so that's the level that he's watching for in the near term. Vaishali, on the charts, what are the prospects?
So this is absolutely the technical resistance that he's talking about, 260 levels. So right now, I would say 235 is the support. So it is on a downward trajectory. 235 is the stop loss. So I think the stock should bounce from here on. And let's see.
That's with regards to where ONGC is concerned. Our next caller, Shankar Narayanan, is calling in from Bengaluru. A very good morning to you. How can we help you today?
Good morning, madam. I'm a regular viewer of NDTV.
Thank you so much.
Both angles, congratulations to all of you. Both today's experts, both Rajesh and Vaishali madam, I am really appreciating their way of helping us. My question is on CAMS. I recently bought some months back, 4 shares at 4177.
Okay.
After that, the price came down to 3,900. Then again, it shot up now. So, is it the right time to add, or we have to wait for the quarterly system? Because their performance, everything is good. I have studied the company.
Okay.
Their mutual fund holdings, maximum support from the mutual fund industry, all those things I have learned. Their ROC, ROE are fine.
Understood.
And their PE also is below the industry. So let us have to have the view. Long term, I wanted to hold a long term.
Okay, Shankar, first of all, thank you so much for those kind words and thank you so much for watching us daily. Rajesh, I'll take this up with you. You studied the company very well. What's your view with regards to where CAB stands?
See, first of all, it's a very good thing that the guy he has studied the company, and that should be the procedure before investing your hard-earned money. I agree to the fact that CAMS is doing very well. The numbers have been good, return ratios are good. And going forward, also with the kind of increase in SIP amount every month, I think these kind of companies, whether be it CAMS or Tech or other capital market related companies like BSE and all are going to do well, no doubt on that. In a short term, there might be ups and downs because of market conditions and other things, but for a longer term horizon, these companies are going to give decent returns, I would say. So if you have a long term horizon, continue to hold, ignore short term price movements.
Okay. If you have a long term horizon, continue to hold is the view coming in on CAMS. All right, our next question, in fact, our next caller, Ashok is calling in from Hyderabad. Ashok, a very good morning to you. How can we help you today?
Very good morning. I'm planning to invest 5 lakhs and I'm looking for either Suzlon Energy or Inox Wind or both.
Okay.
So just I want to know. I'm investing for 6 months to 1 year.
Okay. Got your question, Ashok. Just want to...
What is the right levels to enter? What is the right levels to take an entry on those things?
Okay. Any specific reason as to why you've chosen only these 2 counters in the renewable energy space and wind specifically?
Yeah, going forward, I think as we are having a lot of power things were going on, but it is slowing down now. But again, I'm thinking that it will pick up in next 6 months to 1 year. So at the same time, it came down. At the same time, Suzlon came down from 76 levels to 64, 62 levels.
Correct.
As it is support zone, and Inox Wind also trading between 200 to 160. So it came down from that level. So that's the reason I'm looking into. I was verifying these 2 things.
Okay. Ashok, got your question. I'll take this up with Rajesh. Rajesh, he has almost 5 lakhs to invest in right now, and he's saying if he can go ahead and buy Suzlon or Inox Wind or maybe both. But, energy transition is going to be the next big thing. Would you recommend to go ahead and buy one of these counters and anything in the solar space as well?
See, coming one by one, the companies he has chosen is both into renewable energy, no doubt on that. Suzlon has repaid its debt, sitting on some amount of cash, going for capacity extension and all. But all said and done, both the companies are trading at their optimal valuation, and any major upside from these levels would be a little difficult task. And moreover, when you talk about long-term horizon, I think quality matters, and you should go for large cap names like a Tata Power, which is also in a renewable as far as conventional energy also. So that's a better pick, I would say, putting new money into a power sector stock for a long-term horizon.
Okay, so that's in regards to where these power companies stand. We have one more question from Srishil, who is writing it from Bengaluru, and he's currently holding JP Power. He's invested around 15,000 odd rupees. Okay, I think we've taken this. All right. Then our next caller is from Prasanna, who is okay. We've also taken this. We have Delta Corp as the next question. Manohar Kher from Mumbai is holding 600 odd shares of Delta Corp at an average price of 152. He wants to know if you can average, hold, or sell at the moment. Vaishali, on the charts for Delta Corp.
So, well, chartically, it is showing signs of improvement. Hold for a while. If the stock crosses 90-92 levels, you can expect 105. But if you have to go in this sector, I think Nazara is already in a set trend. I would prefer that.
All right. So that's it with regards to where Delta Corp stands. Our next question is from Jyothy, who's holding 500 odd quantity of the counter. She's not mentioned the counter. That's interesting. All right. We'll ask her what counter she's holding 500 shares of. But the next question is from Shrikant, then from Hyderabad. He's holding Paytm at an average price of 1376, 100 odd shares, and wants to know if he can hold or exit. Rajesh, lots has happened with this particular counter. What do you suggest? Should he continue to hold, or should he sell at the moment? What should be the strategy?
See, holding would be on hopes that things would be better going forward. But I don't think once and continue to invest in a company like Paytm, the numbers have not been that exciting. There are a whole lot of negative stories going on. Competition is going up. So it's better to switch to some other NBFC, maybe a Jio, Poonawalla, the Bajaj Finserv would be a better choice at these levels. And they might help you recoup your losses, what you incur in Paytm.
Okay, so that's with regards to where these finance companies stand, fintech companies in fact. All right, the next question is from Hariharan, who's writing in and wants to know about Jyothy Labs. He's holding 500 odd shares of Jyothy Labs, bought at 323 a piece, and wants to know if he can hold or average at the moment. Vaishali, on the charts, what are you observing and what is the support and resistance that you see?
Well, I'll just have a look because it's on the other one.
All right, Jyothy.
So I don't have the stock. Sorry, I don't have.
All right, Rajesh, in your view on Jyothy Labs, it's one of those, small cap companies, in fact, not small cap, but small to medium cap companies in the FMCG space with a decent valuation.
I think one can continue to hold very strong brand. The Ujala brand belongs to Jyothy and it's doing very well. It's one of the market leader in that category. And apart from Ujala, there are a lot of other brands also with Jyothy. They are doing very well month on month, and numbers have been good. The margins have improved, and with inflation going down, I think demand from rural side is also going to go up. So maybe a target of 373 odd levels in the next 12 months is quite possible. At these levels, it's a hold. And by any chance, it comes to around 300 odd levels, it would be a add.
So that's with regards to where Jyothy Labs stands. The next question is from Angad, who's writing in from Indore. He's bought Garden Reach Shipbuilders at 1569 a piece. Wants to know if he can hold or sell at the moment. Vaishali, on the charts, how is it faring?
So I would say Garden Reach, of course, one has, if he has bought at good levels, I would say book partial profit because it is showing resistance at 3400 and currently at 3087. So if this level breaks, it can see a downslide coming to 2600 levels. So no, I'm booking partial profit.
Okay, that's with regards to where Garden Reach stands. Next question is from Vikram, who is writing in from Bengaluru. It's an interesting question. What he's saying is that he's studied EIH Limited, and he's saying that the PE appears to be least in the sector as compared to something like a Chalet or ITC Hotels. And it's a good dividend paying company as well, and wants to know the right levels to make an entry in this counter. And would you recommend buying this particular counter in the hotel space for the next 3 to 5 years? Rajesh, what's the view like? Is EIH the best pick in the entire hotel industry space?
See, travel and tourism has been doing very well after COVID. And all these hotel stocks are doing well. EIH, with its brand of Oberoi and all, they are into top category, I would say, and the valuations are also good. One can add to this. Apart from EIH, there are several other hotels like APJ Surendra, which is trading at a very low valuation that has a Park Hotels brand. Or even ITC, which the gentleman said, because of the expansion plan that the company has almost said that the management had categorically said that they're going to double the capacity in the next 5 years. It's a debt-free company doing very well belonging to the ITC group. So I think all these three stocks are good enough and one can consider buying any one of them.
Okay, so that's with regards to where these hospitality stocks are concerned. But with that, Vaishali and Rajesh, thank you so much for joining us and taking us throughout the show and giving us all those insights. We're completely out of time on this edition of Ask Profit, but do stay tuned because Know Your Company is right back on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh, on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome to NDTV Profit. You're watching Know Your Company. And one stock that we're dissecting today is Sky Gold. Joining me is also Mahima Vachrajani, who tracks the sector pretty closely. Mahima, clearly, with regards to where Sky Gold goes, an interesting company that we have been watching out for. The kind of growth that it has achieved in terms of the markets is fabulous. Now, the key question over here is as to why are we talking to the company? But before that, let me quickly take you through, what the company is all about. Firstly, the company is established in 2005 and they're mainly into designing, manufacturing and marketing of gold jewelry. Now, why is this company on KYC? The first plate that you see right now on the screens, why are promoters offloading? Because that's the latest one that we've picked up in terms of promoters which have gone ahead and offloaded nearly 4 to 5% stake right now. What is the reason for that, and is this what they're looking to continue doing as well from here on? Moving on, the second question that we ask on KYC right now is why enter the lab grown segment in FY26? It's an absolute niche that they're looking at because bulk of their businesses in terms of gold jewelry. Getting into lab grown, where to what we understand is 14 carat is what they're concentrating on. So we'll understand that rationale on that front. Thirdly, if you talk about the numbers, their profit growth has been higher as compared to their top line, and from a margin perspective, it's single digits. So to understand the math in terms of why this kind of a permutation combination that comes up in terms of their profit and loss account, the growth that they've been achieving, 3 digits, is this going to be sustainable from here on or not? And what is it that will lead to this kind of sustenance? And very lastly, export is another aspect that they're considering. Currently, it's in single digits for the company. The plan is to grow it to double digits, and if I'm not mistaken, it's around 25 to 30%. So what is that strategy going to be with regards to exports? And to this kind of growth that the company has been achieving, how much will exports add on? I think those are the key questions, Mahima, that we should be looking at as well. But very quickly, in terms of about the company, we were talking about what the company does. Designing, manufacturing and marketing gold jewelry is what they're looking at. Apart from that, in terms of the business model, what's interesting is it's a B2B model. That means the company actually manufactures gold jewelry and gives it to retail companies. So that's what you're looking at from a business perspective. The products are mainly in that mid-range category. So mid-range jewelers is who pick up this kind of jewelry from a Sky Gold. Let's quickly understand their clientele. Malabar Gold, Joy Alucas, Senco, Kalyan Jewellers and Carrot Lane. These are the major clients that the company has so far. But what's interesting is the names they've added in FY25. They've added names like Indriya, Carrot Lane, PN Gadgil, as well as Pothys and Vega. So these are the ones which have added in FY25. Whether they've given them business so far or not is a question that we will be asking the management from here on. In terms of manufacturing, their facility is around 1.3 lakh square feet, capacity of around 12.6 tons per year, and they're expanding to almost manufacture 200 kgs per month to 1 ton per month. That's what they're looking at. Product portfolio as well, let me take you through that. 9 to 24 karat gold is what they are manufacturing, and this includes rose gold, white gold and yellow gold. Their focus is mainly in terms of lightweight jewelry, and the company has moved from generic to complex manufacturing. In 3 years, in fact, if you talk about their design team, that has also scaled to almost 110 members. So that's what it's looking like in terms of where the overall business goes. But I think Mahima could talk about more in terms of their additional foray.
Right. So in terms of their additional foray, like Hiral was mentioning earlier as well, diamonds is something that they've made a foray into, and lab-grown diamonds is going to be something in focus. The Sky9 brand is a lightweight and contemporary jewelry brand that they have taken on board, and this is going to focus on making lightweight diamond jewelry. Plus, in the lab-grown diamond space, they're planning to add 14 karat lab-grown diamonds. So that is going to be something to watch out for, because that is going to be something that will be more of from an export perspective, since they're also planning to increase their overall exports. In terms of their overall exports as well, they've expanded into the US markets as well, and they plan to grow their exports going forward as well to that 25 to 30% of the overall revenue. Plus, in terms of the business mix, around 65% is corporate and overall 35% is others, but they plan to elevate that to almost 100% in the next 3 odd years is what the management has said. In terms of the overall inventory management, the strategy is to manufacture low grammage and move towards more fast moving designs. So that's with regards to where their inventory management stands. So overall, this is the picture as to how their, of course, manufacturing takes place and what the strategy is in place here.
Lots to ask the management about. Let's quickly look at the rating parameters, Mahima. Firstly, the income statement check is what you're watching out for in terms of the first rating parameter. We'll look at the balance sheet, cash flow, return ratios. These are the top 4. Moving on, you look at the shareholding, the street credentials as to what the street is looking at in terms of the company. Valuations, we're trying to value it with companies who are actually, retailers into the jewelry segment. So that's the like-to-like comparison that we're looking at. And the street coverage along with the outlook is the key for this one. So these are the 8 parameters, Mahima. Let's start off with the first one.
Right. So for income statement, overall, the performance of the company has been good when it comes to 3-year CAGR performance and 3-year growth as well. But like Hiral mentioned at the start of the show, the key question here is as to how profitability has grown much and far better than how revenue has grown. But with respect to their overall top line growth, 3-year CAGR has been roughly 65 odd percent. EBITDA, the 3-year CAGR has been around 114 odd percent, and the overall net profit CAGR has been roughly 99%. Margins, margins have been on an increasing trend, though still in single digits. From a 3% in FY23, they've gone to around 6% in FY25. In terms of the overall revenue split right now, domestic stands at 92% and export stands at 80%, which the management plans to grow exports to that 25 to 30% mark of the overall revenue. In terms of the volume growth has also been very good for the company. Q4 FY24, the overall volumes stood at 460 kg per month, which was a 300 kg per month in Q4 FY24. So significant amount of growth in terms of volumes as well. So overall, the entire income statement posts a good picture, which is why we've given it a thumbs up, considering the overall 3-year CAGR growth as well as volume growth in picture.
So that's a thumbs up on that front. Let's look at the balance sheet and check that. Now, what's interesting is that the cash balance has been absolutely strong. If you look at FY23 to 25, the cash in bank has grown from 18 crores to almost around 175 crores in terms of FY25. So that's a strong number coming in there. If you look at the other aspects as well, in terms of the debt is something which is another matrix we should be looking at, where the cash on the books on the bank is enough to cover the borrowings of the company, which is again a strong point from here on. In addition to that, if you talk about their new facility, they are planning to develop almost 5-4 lakh crore square feet on the land that they have, and this will also go ahead and boost their production to 4.5 tons per month. In fact, they've gone ahead and looked at an acquisition, that is Ghana and Gold. That acquisition also is in progress, and they've already seen a capital raise of around 270 odd crores in the month of October 2024. So the key question that comes up over here is, with a strong cash in bank plus a fundraise that they have done, what is the reason for the promoters to go ahead and sell out stake? Though with all these parameters, we've given a thumbs up to the balance sheet.
Right. So the next parameter is cash flow. In terms of the cash flow, the overall net cash flow position has been negative in the past 2 odd years. When we take a look at how cash flow from operations have fared, they've grown to a negative 273 odd crores in FY25, which was a negative 6.5 crore in FY23. This is because of high working capital changes as well. But in terms of the overall net cash flow position as well, which was a positive 17 crore in FY25, it's gone to negative 3 crore in FY20, which was a 17 crore positive in FY23, has gone to a negative 3 crore in FY25, which is why we've given it a thumbs down for now, because overall net cash flows have remained negative in the past 2 odd years, from a negative 5 crore to a negative 3 crore, slightly downtick there, but still in negative, and which is why we've given it a thumbs down for now.
Okay, so that's with regards to where the cash flows go. Moving on, let's quickly look at the return ratios. In fact, we did have a lot of to and fro with our producers and internally as well as to what should be the rating that the company should get in terms of the return ratios. Yes, if you have to look at 2025, the return ratios are absolutely strong because the return on equity is around 21%. And if you have to talk about the return on capital employed, that stands at around 30%. But the key over here is there is no consistency that the company has been able to maintain, because it's already seen ROE of almost 22% in 2022, and the ROCE, that's the return on capital employed, has actually gone up to levels of 32% in 2023. So there is no trajectory that we are able to gauge whether it's an upward trajectory for the company or a downward trajectory, or whether it's maintained. There is a lot of volatility that you're seeing in terms of where the return ratios are concerned, and that's the reason why we're giving it a neutral rating.
The next one is a very important point, that's shareholding, and we've been talking about this throughout the show, right? Because promoters have slightly been selling their stake in the counter. In terms of the overall promoter holding, if we take a look at the last 3 odd years, the overall promoter holding has gone down from that 73.6% mark to a 58.2% mark as of March. And post that, last week, promoters again sold roughly each of these promoters sold roughly 1.8% stake in the counter and combined roughly 4 to 5% stake in the company. And because of this, we're seeing that since promoters are selling stake in the counter, we've given this a thumbs down specifically. So promoters have been holding stake in two different ways. One, their individual holding, and via HUF. So last week they have sold stake of the HUF, where all three of them held around 2.19% stake, and they've offloaded roughly 1.8% stake. So the overall holding, in terms of promoter, one thing is going down, plus FIs never, held any kind of stake in the counter, and hardly in March 25 ending, FIs hold around 0.4% of the overall stake. DIs again have seen a pickup in terms of their stake overall, which was nil in the first 2 years of March 23 as well as 24, but that has gone to up to 7%. Lastly, in terms of public shareholding has gone up from 26.5% to that 34.3% mark. But like I mentioned earlier, because promoters are slowly and steadily decreasing their stake, we've given it a thumbs down here. And the question really to ask here is that why is that happening?
Interesting. So why is that happening is one question. And the other aspect is the kind of names that are coming in as well, because if you see the trend, the DIIs have been increasing, and in the latest one as well, I think it was Bank of India mutual fund which bought around 0.5% of stake. So that is one aspect that we need to consider on this front. But apart from that, if you see in terms of the street credentials, let's quickly look at that aspect. In terms of street credentials, in terms of the stock performance, 1 month the share price is down 15%, but this is mainly on the back of the pressure the company has been facing on the back of the sale that has happened. However, on a 1 year basis, 95% is the kind of return. 6 months again similar, 26% downtick. YTD also, if you see, it's a 20% downtick that you've seen, and the actual shining part is 95% upside in terms of the last 1 year, and in the last 5 years 13 times is the kind of returns an investor has made in terms of Sky Gold. But only because of the recent pressure, it's a neutral rating that we've given in terms of the street credentials.
Right, absolutely. And in terms of valuations as well, even this was a point of discussion when we were giving it a rating, because overall the valuations are cheap right now as compared to where the other jewelry companies stand. There is Kalyan Jewellers, which is trading at 75 times. There is Senco, which is trading at 34 times. PC Jewellers at 13 times. Titan trading at 95 times. Sky Gold is trading at around 35 odd times, which is cheaper than as compared to something like a Kalyan Jewellers or a Titan. But overall, trading at 35 times is still not cheap when it comes to taking a look at the valuations, and which is why we've taken a neutral approach when it comes to valuations for now.
Okay, so that's with regards to the valuations. Let's quickly look at street credentials. Now, the thing is, not too much of coverage that's happening in terms of Sky Gold. So you just have a buy rating, and that's a single buy rating that's coming in on this counter with a potential upside of 74%. So hence a neutral rating on this one. So those are the 8 aspects that we've spoken about. But let me take you through the final performance rating. If you have to consider all the parameters on your screens, if you can just quickly get that one, from income statement check to your balance sheet check, return ratios, cash flows, shareholding. Income statement, balance sheet, again a thumbs up, cash flow is a down. Return ratios, as we said, that because there is no consistency, it's a neutral. Let's go to the next one. If you talk about shareholding, a downtick because the promoter has been selling. Street credentials, again a neutral. Valuations, neutral because it's on the expensive side, not as compared to peers. So overall, a 4 on 8 is what NDTV Profit has given a Sky Gold in terms of its KYC rating. But to discuss further on this, let's also welcome in Mangesh Chawan, MD and CFO at Sky Gold and Diamonds. Mangesh, welcome to the show, and a pleasure to speak to you at NDTV Profit. Our first question coming to you is the promoter sale that has actually, worried investors right now on the streets, and that's the reason why we've seen a downtick in terms of the stock price if you have to look at the last 1 month or even on a YTD basis. If you could help us understand what's the rationale.
Yeah, sure. So we, promoter, his company is like completed 20 years. We have started a journey from
2005 and it's about 2025. So we have not uploaded any shares from last 20 years. We have been growing the company. We done a 2 fundraise in the company, and first we were concentrating on the company growth and company perspective. Again, in 20 years, we have uploaded first time the 3 promoters have uploaded together 4.97%. So again, we took a warrants 18 years back of 1.4%. So it will be add up in July. So net, I will be at 3.6%. We uploaded together as 3 brothers. We promoters are there. So so again we uploaded after 20 years. So between 3 promoters, and again some mutual funds wanted to Bank of India purchase and other funds also purchase. That's why we uploaded here.
Okay, Mangesh, hi, Mahima also joining in. Just want to get a sense, Hiran and I were discussing earlier as well about this, that overall your 3-year CAGR in terms of your top line growth has been around 65%, but that compared to a net profit has been around 99%. What has worked in the past 3 years when it comes to your cost optimization? Because I believe that is something that has led to a better growth in terms of profit. And at the same time, margins have of course improved, but do you think there is further improvement that you expect in the margins going ahead from that 6% mark?
Yeah, 100%. We came up in our journey. You can see 2010 to 20, we work on the revenue model and customer acquisition model. And in the last 3-4 years, we came up with new products, new verticals, which add up to our margins. We came up with the studded jewelry, lab-grown jewelry manufacturing. Again, we came up with 18-karat rose gold, white gold jewelry. So this expanded our margin. And going ahead, we are going to gold metal loans, which will improve our PAT levels by 0.4, 0.5 basis. And again, we are increasing our gold, advanced gold business from large corporates, which can again add up to our gross margin and EBITDA. So we are moving ahead to advanced gold business, which customer provide us the gold and we have to manufacture for them. So we don't have to fund the inventories and all in that. So we are expecting in 2 years, 10% advanced gold business will come from that. So again, we are coming up with new verticals in 18 karat also. We are expanding studded jewelry, which will help us to improve our gross margin. And again, gold metal loan, our debt converts into, whenever converts into gold metal loan, it will help us to improve 0.4 basis at the PAT level also.
Okay. Mangesh, 2 questions I have. One as a follow-up to the first question I asked you about promoter selling, and second as a follow-up to what Mahima asked you as well. So you're saying you're looking at value unlocking because over the last 20 years, the promoters have not really offloaded anything, right? Is there any plan of further stake sale that could happen from promoters on the back of value unlocking? That's part 1. And from a business performance perspective as well, we don't understand the math with the profit growth being way higher as compared to the top line growth and the margins being in single digit when gold prices have been increasing in this to this extent. So if you could help us understand that permutation.
So again, on the offload basis question, we are not going to offload anything in the future 2-3 years perspective, because already we have uploaded a good percentage. So we don't want to offload in coming 2-3 years or 4 years anything on the promoter sides. Coming to the margins, you can see we are into lightweight modern type jewelries, and we have come up with many new different verticals. We manufacture for Carat Lane also, and Aditya Birla we onboarded. So we came up with new verticals. We come up with studded jewelry. We came up with 18-karat rose gold white jewelry, which is improving our margins. And again, gold rates are going up. So this is changing our inventory mix. You can see our majorly our inventory falls below 1 lakh. We are into lightweight jewelry, in which impact is very lesser of the gold rates, because lightweight jewelry is a day in day out jewelry selling 12 in 365 days. So inventory shift is there. 10 grams in inventory we are making in 8 grams. We are making the inventory much lighter with our 3D printers, with our technologies and all. So again, a number of pieces are gaining, volumes are changing, inventory shift are changing, but lightweight jewelry has lesser impact of gold rates, and that's why we have good margins in that.
Okay, Mangesh, just want to get your sense. FY25, your split was 92% domestic and 8% exports, which you've said will grow to around 25 to 30% of your total revenue. Just want to get a sense that how will this work, which export markets are you targeting, and plus try to explain us as to how the entire sourcing from Dubai for your export works for you.
So sure, we are at 8 to 9% and we are targeting in the coming 2 years to go up to 25% from export. We are right now opening a subsidiary in Dubai to serve to UAE. So again, when we have an office in UAE, we can do a job work from our parent company, and that will help us to give the ground level support to the customer and a good rate to the customer at the UAE. You can see in India there are premiums of $4 to $5 for exporting the gold. So we will procure gold in Dubai and send the parent company for job work basis, and then we can sell at Dubai, which is the rate going in the Dubai gold prices. So customer don't want to bear the premium of the dollar of the on the gold, making charge they are ready to pay. So that will help us to boost our 20-25%.
Understood. Understood, Mangesh. So I think basically it's the making charges where you pay taxes, the import duty, that quotient is what the customers save as well. So that's how you're looking at that model. But thank you so much for joining us on the show. To do a quick wrap, one interesting aspect over here, Mahima, is where the promoters have said for the next 3 to 4 years, they are not looking to sell anything further. The current sale was mainly on the back of value unlocking, which they were holding for the last 20 years. And export is going to be the highlight of their story from here on, which they plan to scale up to 25 to 30%. But completely out of time. With that, it's a wrap on this edition of Know Your Company. Stay tuned for more updates on NDTV Profit.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
That's huge. That is a biggie. It's out of
Gold Plus Clear Glass. पार हो या नियर, सब कुछ दिखे clear.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
forces in ED seeking explanation on Yuvraj Singh, Harbhajan Singh, on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in
Hi, thanks so much for joining in. You're watching NDTV Profit, and those are live visuals. It's a momentous occasion for us here in India. We're all looking skyward, or will soon be, either figuratively and in some cases quite literally, as the Axiom 4 mission, which you're seeing on the screen right now, as it takes off from NASA's Kennedy Space Center in Florida. And that's because on that rocket is India's very own Shubhanshu Shukla. He is becoming the second Indian to go to space. The countdown is live. This is after a gap of over 40 years. The last time there was an Indian in space, that was Rakesh Sharma, and he coined the term that you're all familiar with. Sare Jahan Se Acha. There you go, the rocket is taking off as we speak, and look at those visuals. It's a momentous occasion. There are 4 humans on that flight, among them Shubhanshu Shukla. This, as you know, is a collaborative human space mission run by Axiom, NASA and our very own ISRO. In fact, Shubhanshu Shukla is representing ISRO on that mission. There are 4 crew members on board. The commander is Peggy Whitson. She's the director of human spaceflight for Axiom with 675 days of space experience. The pilot, as you know, is our very own Shubhanshu Shukla. He's an Indian Air Force pilot, an astronaut with ISRO, and he's going to be fundamental in India's journey to space, India's own journey to space through the Gaganyaan mission and everything else that ISRO is working on. There are 2 mission specialists on board. One of them is Slavoj Wisniewski, and he's of Poland, and you've also got Tibor Kapu of Hungary. What a progress that rocket is taking. It's the Dragon, of course, and it's on its way to the International Space Station. Now, once they reach space, as I point out, they will make it to ISS, which is the International Space Station, and they will spend as many as 14 days there conducting research on behalf of several members of the scientific community. There will be 60 research projects that are conducted. Remember, this is a rocket flight that is taken off after multiple delays. Everything had to be absolutely right, And this is the difference between the launch of a commercial satellite or anything else that is not crewed by humans into space and a mission that is run by humans. When there are humans on board, everything needs to be absolutely perfect. You need to have every element, and this is complicated technology. There is complicated technology involved, of course, and there will be, as you know, if you watch some of these films in the past, detachment of the rocket, of certain portions of the rocket. There you can see that detachment of certain portions of the rocket as it makes its way into space. And ultimately, once it does make its way into the rarer parts of the atmosphere, remember, this is going to be a low orbit mission. And so it will at some point move beyond the gravitational pull of the Earth, and it will start orbiting in a low orbit in India. And by the way, we're going to be speaking to several people over the course of this next half an hour, just to give you a sense of why this is so important. We're going to be speaking to Dr. Amitabh Ghosh, who is a NASA Mars scientist, and also he's a planetary scientist. We've got Dr. Pavan Goenka, who's the chairman of InSpace, which is India's very own space program. And we've also got Pavan Kumar Chandana, who's the co-founder and chief executive officer of Skyroot Aerospace. Those live visuals tell you a story, don't they? You may not understand everything that is going on, but they are momentous, to say the very least. The entire globe looking upwards and looking at these visuals, and of course this is part of the process that will take Axiom 4 to the International Space Station. Those are the parents of Shubhanshu Shukla who are watching this live, and everybody's got their fingers crossed. Oh, so you have visuals from inside the rocket as well, and everybody's watching with fingers crossed at this juncture. Those are live visuals, of course, coming through from the rocket, the 4 astronauts that are making their way all the way up to beyond, in fact, the gravitational pull of the Earth, and they will eventually make their way to the International Space Station. It's not a journey that's going to be completed very quickly. Of course, it's going to take several hours. 28 hours is what is expected to be taken for the crew of Axiom 4 to make their way to the International Space Station. And of course, once they make their way to the ISS, there will be multiple research projects that they will undertake on behalf of several countries from around the world, not least of which from India. There will be at least 60 research projects that they will take up. And there's an interesting one that even studies diabetes, believe it or not, but the rest of the projects are going to be talking about or going to be studying space-related research. Some of those projects are ISRO's very own projects, and the learnings from this mission are going to be absolutely crucial in the Gaganyaan project, which aims to take our own astronauts into space. But joining me now is Dr. Amitabh Ghosh, who, as I pointed out to you earlier, is the NASA Mars scientist. Thank you so much, Dr. Ghosh, for taking the time. The question that I'm asking is, why is Axiom 4 such a big deal, and why is there so much focus on it right now?
Well, there's three interesting things. There are 3 countries which are sending the second astronaut to space. So, and India is one of them. And I think it's even more exciting for India is because our astronaut will have their own ride, which is Gaganyaan, a year or two back. So, it's like, it's different if you're driving a friend's car, but it's different if you're driving a friend's car and you're buying your own car the next year. So there's so many learnings that our astronaut could, Shubhanshu Shukla could do in that quest, which will affect his own journey a couple of years in India's own spacecraft.
Yeah, I mean, it's taken a lot of time for the second Indian to make that journey to space. And so therefore, it's very important. And you pointed out Gaganyaan, Dr. Ghosh. Let's talk about why this is so important in the context of India's own dreams of having astronauts in space and for its own mission to space. What will be done on this mission that will be a precursor to that one?
So I think, just think maybe 500 years back when the continents were being discovered. And so there were a few countries which did this, which went forward and discovered these continents, and the world became a bigger place. So now we are again at that corner where human spaceflight will make our world a bigger place. Very soon, maybe in 20 years, certainly in your lifetime and my lifetime, people will be landing on the moon. And maybe in our children's lifetime, they will start having bases on the moon. So our world is going to increase. And so there are few countries which are going to partake in this journey, the countries that have that capability. And India is going to be one of them, which is huge. And so we don't really think of it in this terms. Most countries in the world, and there are maybe 200 plus countries, right? They don't have the capability of spaceflight, robotic spaceflight, leave alone human spaceflight. So it's a huge deal. So 50 years from now, when there will be a base on the moon, or there'll be journeys maybe 100 years from now to Mars, there will be a few countries who will be part of that club. And so India will be one of them. So that's what is so very exciting and significant.
So Dr. Ghosh, to that end, let me ask you this. Why is it that there are so many satellites, so many flights into space by rockets that are not crewed by humans, so non-human missions, if you can call it that, and there are so few human missions? Is it a very different technology? Is it the cost involved? And so from that perspective, with these missions that are so close to each other, do we see more missions go up?
No. Okay, so you have asked a very good question. So imagine you were going to space compared to, say, a rover going to space to Mars, right? So if you go to space, then we have to be thinking of the pressure of the vehicle, the temperature of the vehicle, whether you have water, whether you have other facilities, you have meals. So you have to have a foolproof system, subsystem, engineering system, the power subsystem, the whatever is keeping the oxygen levels up. And then you have to think of redundancies. What if the power system fails? What is your plan then? So these things make the human missions much more engineering-wise rigorous, and sometimes maybe 4 to 10 times more expensive. So you cannot take a risk if the human is flying. You can perhaps take a risk if there's only a robot, if there's only a rover going to Mars or the moon. So that is the reason. And why do we have more non-human missions? Because most of the missions are like to put a communication satellite in orbit, to put Starlink satellites in orbit. So the motive here is to really has a different goal. It's not for humans to go and do experiments in space. So there are more demand for that, and there's less demand for humans going to space station, right?
Dr. Ghosh, finally, you spoke about those experiments, and there are several, and you pointed out at the start of this conversation, there's going to be a collaborative mission, and each individual and each part of that crew is going to carry out experiments once they get to the International Space Station. Can you talk about why that is important? What kind of experiments are these?
Okay, I will answer a different question. Since you're a business channel, I will answer a different question. So we are at the cusp of space tourism happening. Okay, so we are at this, if you think of commercial space flight, this happened in the early 1900s, right? Very few people were in the business. The Tatas were in the business, Henry Ford was in the business, and he went bankrupt. People did not want to fly. People didn't think this was feasible. People thought, who would want to go to another continent? So now we are in this stage where Elon Musk's company has reduced the cost of spaceflight by 95%. So suddenly a cost to go to Mars is no longer astronomical. It's probably the cost of maybe $100,000 to $200,000, which you can afford in a lifetime. So we are sitting in this sector, which can be a $1 trillion business in 10 to 20 years. And I think we are at this crossroads now. So people are questioning, people are saying that, well, why do this? Then if you notice, ISRO, NASA, all these are taxpayer funded entities. So they cannot do this forever. So at some point, the private sector has to come in, and they are coming in. And so you have businessmen like Jeff Bezos trying to set up a base on the moon, businessmen like Elon Musk trying to lower the cost of space travel. So if you think of in a business perspective, nobody would have said, for example, SpaceX, the valuation is now $100 billion. If you look at 20 years back, SpaceX was just starting out. It was out of a garage for almost. Right. And no profits. And look what has happened. And this is just the tip of the iceberg. So we are looking at a very different journey, and maybe even a sector opening up, which would be space tourism.
Okay, so and on that point then, I wanted to ask you about that, but the missions that have gone, not missions, I shouldn't call them that, but the flights that have gone, almost flights of fantasy, you have suborbital flights that have taken place. What we're talking about, Axiom 4, is a low orbit mission. So do you think that private sector, SpaceX, etc., will soon have low orbit missions?
No. See, I think this is my personal opinion. I think low orbit missions will die out. Low orbit missions are 15 minutes or 10 minutes into space, and they cost like, I don't know, $200,000 or something like that. It's not interesting enough. I don't think, if you go to a ride in Disney World, it's 20 minutes, it's okay. But this is too much hassle just to go 40 miles into space and then come down. See, what's happening to Axiom 4 is what it is, how it should be. You go to space for a few days, you stay there, you do some things in space, and then you come back. Or you go to the moon and you stay a few days and you come back. So I think that is the sector which would probably in the long haul survive.
Okay, last question. Do you think that there could be an Indian company, Dr. Ghosh, that stands up to the likes of SpaceX, that is an equivalent of SpaceX, a private company at that?
Yes. So now you're talking business. So you have to think, if there are adequate number of Indians who will buy their services, then there will be an Indian company. So people go crazy that why is an Indian company doing products? Why is it not a Silicon Valley company? The markets sit in the West. If India had the market, then of course an Indian company would be able to do this. But if the markets lie in the West, if that's where people are buying, then I think it's harder. And then of course you cannot make in India. It's more complicated because of ITAR. It's the arms. This is the US technology control laws, right? So I think there are things that can happen, but one basic thing is, why do all these product companies? Why do Apple launch in the US? Because the market is there. If Apple was to just service the Indian market, or an Indian company like Apple was to evolve, the question is whether the R&D cost would be offset by the revenue that is generated out of India. I think that's the bottom line.
Okay, Dr. Ghosh, thanks so much for joining us today, and pleasure having you on the program. You know, as those visuals were playing out on the screen, one of the things that struck me was the stark difference. When you look at those touchscreen panels and you look at those astronauts sitting in that rocket heading into space, the stark difference from what Rakesh Sharma would have felt as many as 41 years back. Space technology has changed so dramatically in that time frame. And really, so much of this is related to the success of that technology, of what even Indian companies are doing. So let's give you some perspective on what Indian manufacturers take from this event. Joining me now is Pawan Kumar Chandana, who's the co-founder and chief executive officer of Skyroot Aerospace. Pawan, thanks so much as always for taking the time. And let me ask you, as an Indian manufacturer, what do you take from this?
the most inspiring event of the year, I would say. In fact, like, we were very proud that when India landed on the moon, south side of the moon, I think this is as historic as it, considering that after 41 years, an Indian is going to space, and for the first time ever, somebody is going to the space station, and our own Indian astronaut is going to the International Space Station. So I think this is a historic moment, and it's going to inspire generations ahead. And to me personally, it's like a very inspiring moment, and it also shows the leap India is taking in the space sector. From starting from the early days where rockets were transported on cycles to now we have landed on the moon, and now we are sending our own astronauts to space.
And your own journey has been pretty much like what we're talking about, the frenetic pace of increase. It's been a takeoff. You're involved with projects with ISRO, you're working on Gaganyaan as well, and all of this, I spoke to other people in the run-up to this, and they've all said that this is a precursor to Gaganyaan. So it's exciting times for you as a company as well. Talk to me about that ecosystem and where you stand. What are you doing, and why is this exciting?
Yeah, so as Skyroot, we are a leading space startup in India, and we have launched India's first private rocket to space. That was in 2022, and we are just a few months away from our launching of commercial satellites to orbit. So very few companies in the world are launching commercial satellites to orbit, and Skyroot will be one of them. And that shows the ecosystem which we are part of. Like, for example, India has been a spacefaring nation since the 1960s. We have the ecosystem, we have the launch pads, we have the talent, we have the manufacturers, we have a great ecosystem around us in which we are leveraging all that and going very quick and building rockets from India for the world for the commercial launch of satellites. So that's what we are doing. And in fact, for example, just to give an idea, the next rocket which we are going to launch has 400 suppliers, all from India, groomed by ISRO for decades. That's the kind of ecosystem, and it will be launched from a launch pad built by India for decades. So I think that's the kind of ecosystem which we come from, and very few companies, less than 10 companies globally are doing, launching commercial satellites to orbit, and we will be one of the very early few of them. And that also a matter of pride that an Indian company is building something as deep technology as a rocket which can send satellites to orbit. And then, we're going global. So, and then space market is global, and it's almost a $400 billion business today, and is set to become $1.8 trillion by 2035. So it's a exponential growth in the global space market, and it's a great opportunity for India to take leaps and be part of the global space ecosystem.
Yeah, and Pawan, exciting times, certainly. Also, the numbers that you're talking about, absolutely large, right? And the potential is humongous. I also take heart from the fact that you have significant localization in the rockets that you're building. But I do want to ask you, as a manufacturer, the focus seemingly right now is on non-human flights or non-human missions that are sent to space. For you as a company and for your peers here in India, will that pivot to human flights, and how soon will that happen?
Absolutely, absolutely. So right now, we are taking step-by-step process. The first step is to do satellite launch, which is non-human launch. But our vision as a company is to open space for all. The vision to meet open space for all requires to actually also launch human to space. We envision a future where going to space becomes as easy as like flying on an airplane, like how we do it today, quite regularly, quite common. So we want to create a future where it becomes quite easy to go to space. Space is no longer something, out of our horizon. Space is something which is regular part of our lives, whether it is for tourism, whether it is for work, whether it is for industry. In fact, space can host like great set of industries. There are materials which can only be produced in space. So there'll be a lot of economy which will be based in space in the future, and we want to be part of that journey. So the next leap for us would be, of course, though we are starting with the satellite launches, next leap would be for us to get into the human space flight. But of course, it's going to take time. And Gaganyaan program is, I think, a great leap for India, where ISRO takes that giant leap. As always, ISRO takes the first major step to create that ecosystem. So now it's creating that ecosystem through Gaganyaan program for human spaceflight. And India will become one of the very few countries which have that capability, whether it is design, manufacturing, testing, knowledge regarding human spaceflight. And I think that will be a good foundation step for all the private companies to go on top of it and then make it more commercial. So that's the whole idea. So though we are starting with non-human flights, eventually the vision is to get into human spaceflight down the time. Probably it would take maybe close to 7 to 10 years from now. But I think that's a eventual evolution for us from here to there.
Yeah, that's a direction that we're taking. 10 years, I'm glad that you put a number to that. The question that I have next has to do, and since we're on a business channel, Pawan, it behooves me to ask you this. This is not a cheap business to be in. It's highly technical. The materials involved are extremely costly. And so therefore the question arises, if you need to scale this up and if you need to do more projects like this, availability of capital is going to be key. So is that something that companies that yourself will tap the public markets for? How does that work?
Yeah, absolutely. So as Skyroot, we are have the privilege of being the most funded startup in the space sector. We have raised close to $100 million of capital, which we never imagined that we would be able to do when we started off in 2018. So that shows the potential of the sector that, both domestic and global investors are backing domestic space companies. I think it's a great validation. And then I think access to capital, space is a capital intensive sector, like you mentioned, and we need more and more capital as we go further. I think the next few years we'll be, of course, scaling with private capital. But eventually, I think, Indian public markets are very, very attractive, very bullish, and space is something which is close to the heart of every common man in India. So I think the next leap of growth after a few years will definitely be the public markets. And we would love to leverage. We want to scale the company to a level where we can be a great public company, and then from there onwards, I think it will be good growth phase, which Indian public markets can enable, is what we believe. But of course, we are all in the early phases. We have to get to that level where we can get into the public markets, and then from there, I think it's a wonderful opportunity. And like I mentioned, space is a $1.8 trillion business by 2035. I think India needs to take more leverage and more opportunity in this. Right now, we as a country are 2% of the global space economy, and the government's aim is to make it 10%. And all the private space companies and startups are going to take a leap in this. And I think and the next phase of growth can come from the public markets.
Pawan, last point, and obviously in this situation, Subhashu Shukla is our blue-eyed boy here in India, and a lot of people are looking skyward and watching his journey into space. What is that one message that you would give to all of those young Indians that are dreaming of making similar journeys?
Oh, absolutely. I mean, Shubhanshu is our new superhero, I would say, for India. Considering that, none of us in our generation has seen anybody launched. Of course, Mr. Rakesh Sharma, a legend, he has launched to space in 1984. But many of us are not, the young India is not born when we saw that flight. But now we see this, historic flight right before our eyes. I'm sure it is going to inspire the entire nation. As you know, a majority of our nation is below, more than 65% of India is below 35 years old. So just imagine, the kind of inspiration our generation is going to get through this flight. And I'm very, very positive that I think this is going to bring up more people into the STEM education, more people into, space sector, more people to fuel our deep tech in India. I think this is going to be a legendary moment. And whatever happened, or whatever launch which has happened, gives everybody goosebumps, every enthusiast goosebumps, and is going to be in history for a long period of time. And I think the Gaganyaan program, and especially the Axiom flight today, will remain in the hearts of our young people and inspire them for decades.
All right, Pawan, on that note, thanks so much for joining me today. And what a message that was to everybody tuning in right now. If you've got dreams of contributing to India's space aspirations, then you know what to do. In fact, on that note, let me get Dr. Pawan Goenka on board. He's the chairman of InSpace, which is India's space program. And let me start by asking you, Dr. Goenka, that very question. One message that you have for Group Captain Shukla, and also all of those Indians that are looking up starry-eyed at this mission that will set the foundation for the future of space travel.
Well, first message to Group Captain Shukla. Captain, the whole of India is looking at you right now. We've been waiting for this moment very anxiously for several days, and we wish all the success to the mission. I'm sure that under 14 days you would come back with a lot of learning and be ready for the human space flight that India would undertake. So all the best to you. And I think for people who are watching and listening, this is a very proud moment for India to have Group Captain Shukla go in XM4 to Space Station, International Space Station, with 3 other astronauts, with several experiments that will be done. But more than experiments, it is the learning that Captain Shukla would have on a human space flight, which will then become the sort of bedrock on which India would plan its own human space flight, which is currently under development. So it's a very, very important moment, very anxious moment. The whole of India is proud of Group Captain Shukla and what he's achieving, and we will be waiting for the moment which will happen in just about 25 minutes.
Yeah, so I do want to ask you, from the Indian ecosystem standpoint, there's so much that has been created over the course of the last few years. It's a very short period, and everything on the ground is moving so frenetically fast. But give us a sense of the moving parts right now, Dr. Goenka. How quick are things moving, and what is the kind of spend that is currently underway?
Well, as you said, there are multiple moving parts, but they're all sort of beginning to come together. We of course have the ISRO as the granddaddy of Indian space. They have all the technology, they have done so many projects, so many missions, made India proud, they have infrastructure. But now the emerging private sector that's coming forward with technology and with capabilities that they've developed, and really, in a sense, starry-eyed ambitions for what they want to achieve in space, is bringing it all together. And InSpace's role is to ensure that these starry-eyed young professionals who are coming into the space industry are able to succeed with the help of InSpace, with the help of ISRO, and create all the infrastructure for it. And the SSLV rocket that was transferred to HAL just 2-3 days ago, the announcement. We have an EO mission coming up for Constellation that will be announced in the next couple of months. We have some satellite manufacturing happening. We have data acquisition happening. So a lot of these things we are putting together, multiple different sort of verticals of the space sector to bring together to make a whole sum of these parts. So as you said very, very aptly, and that a lot of moving parts, but they're all coming together.
Yeah. All right. Dr. Goenka, thanks so much for joining us today and for giving us a perspective. Well, it's exciting times, and it's a momentous occasion, to say the very least. We're seeing history unfold in front of our very eyes, and the promise of a future that takes humans into space is bright indeed. We get back to regular programming. It's been a pleasure bringing this to you. Do stay tuned. This is NDTV Profit.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
That's huge. That is a biggie. It's out of there.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations, and claims. Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of rupees 77 to rupees 82 per equity share of face value of rupees 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of rupees 77 to rupees 82 per equity share of face value of rupees 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers.